Being the author of major best-selling books throughout the world, Harry Dent has been one of the most renowned people to be speculating the trends of the stock market. His vision has been one of the most acknowledged and anticipated views, as the factors he takes into consideration to make a comment makes his analysis much superior to others in the market. One of these books, headed The 0 Hour, which aims at turning the greatest political and financial upheaval in modern history to your advantage, has been known for the analysis being made about the market. This is the latest book that has come up with and has certainly been one of the most famous books written by him. Now, what does he have to say about the 40% correction? Let's find out. Welcome back to another video on this channel. Today's video will be about Harry Dent's view on the 40% market crash. We'll be looking into what may have caused it and what does Harry Dent think could follow this fall. We'll be taking some major points into consideration, so make sure you watch till the end and subscribe to this channel to stay updated. Leave us a like and comment below on what you would like to watch here on this channel. Also, make sure you make all investments after a good due diligence process. The volatility seen in the market may consume even the best of investors if done carelessly. So now that you know the risks involved, let's get you started today. Harry Dent is the founder of HS Dent and is known for the kind of books he writes. Not only this, the uniqueness in his way of analyzing the market is what makes him special. He's been very stern about the 40% correction in April. According to him, the economy since 2007 has been on a slow down. This may have been a buildup that led to this crash that we're speaking of today. He says that the quantitative easing that we have got to fill has created the biggest financial asset. He says that looking at the stocks throughout the day, one may feel like they are in an excellent economy. However, the truth is far from that. He says that the truth lies in the fact that we are in recovery and not growth. He then adds on by saying that we've been growing at 1.65 since 2009 bottom. The factors that have been in favor of this move, and this made the entire situation possible. He then points out the most critical number in the world at that point. He says that the most important number is $520 trillion. Let's see why. This amount is, in fact, 6.2 times 84 trillion GDP. However, the question as to what makes it special is still unanswered. The part that makes it special is the fact that the said amount is 6.2 times the GDP. The number normally may be 2 to 3 times the GDP. However, the fact that we have now touched 6.2 times may have a huge impact on the manner in which the market may flourish in the times ahead. He says that there are high chances that the tech stocks may go down by over 50%. He then continues to claim that the next crash may be as a result of the central banks pumping up the economy against the downtrends that ultimately creates a bubble, which he refers to as a monster bubble. This bubble keeps wanting to burst and deleverage, resulting in debt and hence a losing battle. He says that this will be the first crash, which will then lead to a closing off by late 2022 or early 2023. The fall by then could be as much as 80 to 90%, which will end up erasing the entire bubble that is being formed. However, there's a catch to it. The greatest bubble in history occurred in 2009 all the way into 2021. On top of this, the recovery here was the weakest. This is also the biggest disconnect between stocks and financial assets in the real economy. He asserts that at least 200 trillion of the present 520 trillion will disappear in the upcoming years. This may happen in the next 2 to 3 years as all of the events unfold. This fall does not cause a recession, it perhaps causes a depression. When asked about the potential that the Fed has in saving things going wrong, he replies, "The COVID battle did take the prices down to a V-shaped pattern. The growth back from the V has just touched the 80% mark, and a move all the way to 100% will not be possible." He claims that the Fed printed in 8 months as much as they printed in 80 months in the past. This, according to him, was important to notice and may have serious impacts on the manner in which things develop over a period of time. The crisis that may occur today or in the recent future is being evaded by just printing more money. This may be harmful to the economy as a lot of money will then be in circulation, pushing inflation to a sky-high value. This mechanism of printing more money has led to a situation where the market is way ahead of the economy. It has become difficult for the economy to catch up with such high prices because of the steps taken by the Fed to print more money time and again. They say that they might have to print $10 trillion next time, making things even worse than what it already is. Investors, as a result, will not invest in something like this, which will lead to a crash yet again. The next question that came up here was whether reopening would help make things better. In other words, what impact will consumer spending have on the market? To this, he states that it will take a very long time for the vaccine to get into an active stage. He says that this may take at least till the summer or the early fall. This may just be too far for the economy to hold on to until then. An action immediate enough is necessary to make sure things work out. He also says that COVID is not being managed properly. This, yet again, has been causing serious harm to the world in the long run. He, yet again, points out the 520 trillion financial assets in the world and 6.2 times the GDP, and calls it to be a mushroom cloud getting ready to implode. With these words, he asserts that it may not at all be possible to stop it once it starts. Now, looking into the amount that will disappear, as he mentioned earlier that it's $200 trillion if the government is planning on printing that much again, to suffice the deficit created, the answer to this, according to him, was a no. He says that the very decision to print over $9 trillion in total to overcome a short-term downturn might not really have been the best way to deal with it. He then predicts that continuing this may mean that we may end up with a $40 trillion deficit. Every 2 administrations, we have been doubling the debt, which is not a good indication in the long term and may come with some serious repercussions. According to him, there is a definite way of getting out of this, which is definitely not by printing free money. He says that this could be done by making sure that the government gives room for the economy to grow naturally by getting rid of what he calls zombie companies. As the government starts printing money, the banks don't have to write off the loans, and the cycle continues, creating a bigger debt. This leads to lower employment and a lot more consequences. Nevertheless, a very slow developing economy. He says that the fall of the market is perhaps a cycle that occurs like a rhythm and will continue to occur time and again. He says that we have the greatest upcycle colliding with the greatest downcycle within the next 2 years of time. Therefore, he yet again asserts that we may see one of the biggest crashes of our lifetime. The creation of a bigger monster is exactly what the government has done by extinguishing the natural tendency of the economy. It is now important to make sure that the present is being dealt with in a good manner and the economy is not violated anymore by printing huge amounts of money. He recalls the fall that took place last year, with 40% falling in just 5 weeks. This was a very violent move and was an indication of what could happen if things aren't managed properly. Once this crash takes place, the federal banks will be left with no basis, as people will accuse them of creating the biggest crashing bubble. Back when they were created, within just 20 years, there was a crash leading to a 33% bottom and a 25% unemployment rate. This is exactly what the banks do. Their acts often tend to disrupt the natural flow of the market, and the government keeps printing, leading to a bigger problem. We hope that you liked this video. If you did, make sure to hit the like button, subscribe to this channel, and also hit the notification bell to stay updated at all times. We'll be meeting you again on this channel very soon.